Hi everyone, back again to me, and in this video I will read some article again. And before I start, don't forget to like, comment, subscribe and share. This article by Yasin Ibrahim, investing.com. Federal Reserve Chairman Jerome Powell is expected to deliver fresh clues on monetary policy next week, and some investors believe that failure from the Fed shift to push back against bets on a dovish pivot could set the stage for a rally in stock to erase losses by year end. The S&P 500 will move up substantially if and when they the signal a pause and sustain a rally that could recover all the losses by the end of the year. Jimmy Lee, the founder and CEO of the wealth consulting group, told investing.com in a recent interview. The path of inflation holds sway over whether a Fed pause will become reality and potentially help the broader market erase its nearly 12% loss by the end of the year. Recent reports have pointed to easing in the pace of inflation that is likely to continue according to Lee. Spending on surface may slow as the high pricing in travel and leisure industry after the summer, Lee says, adding further downside pressure on inflation. Others, however, aren't so sure and point to the Thai labor market that will boost wage pressures while other drivers including high rental rates continue to fuel inflation. I fear inflation is going to remain hot for a while, John Luke Tanner, portfolio manager at Aptus Capital Advisor, told investing.com on Thursday. With 5% or 6% weight growth and maybe 6% growth in owners equivalent rent as well as the other rental number that top and to CPI. I think it's going to be awful hard for the Fed to get inflation back down to 2%, Thinner added. Fed speak Moody's rates hike debate. The recent messaging from Fed member hasn't helped clear up expectation on whether the central bank is considering the pivot on in policy. Some members of the Fed appears to be pushing for the central bank to deliver another 75 basis point rate hike next month, while others are striking a more cautious tone. St. Louis Fed President James Bullard on Thursday backed the idea of another 75 basis point rate hike to take the Fed fund rates to a level that will put significant downward pressure on inflation. Kansas City Fed President Edgar George, however, appraised cautious on large high, saying the central bank must be very mindful of the latest impact of its policy decision on the economy. The minutes of Fed's July meeting released early this week were conclusive and contained their usual something for everyone national bank, Australia said in a recent research note. The current odds are slightly skewed toward a 0.75% rate hike at the September meeting, according to investing.com. Fed's rate monitor tool. The Fed fund rate is expected to peak at 3% in March 2020, with about 40 basis points of cuts thereafter in 2023. Okay, maybe that's all from me. Don't forget to like, comment, and subscribe. Okay, see you.